Actually, I was supposed to start with the forex basics, that's the introductory class. But I believe you are kind of familiar. You're not. So today I'll be talking about the anatomy of candlesticks. Are you still with me? Hello, Steve. Information and the bearish and the bullish candlesticks. Also, I'll be talking about the momentum, then the dodgy or indecision candlesticks. So, candlestick formation basically is all about how candlesticks come about, the formation of the candlesticks. So, we have bearish and what and bullish candlesticks. So, for a bullish candlestick, I don't know the color of your charts, but for my own, I customized the color to my own liking. So for the green candlesticks, you see them as orange, and then for the red candlesticks, they are black. So let's say this is a bullish candlesticks, and then when they are so let's say this is a bullish candlestick.
Can you hear me now?
Yes, I can hear you, Steve. I can hear you. So I said
Yeah.
the introductory
Sorry,
class. I
I'm
wanted
having a
to
very
talk about.
terrible network in my end.
Okay, I think Zoom is much better than Telegram. I think so. Maybe our next class will be on Zoom then. So I said you are familiar with the trading terminology, right? So I don't have to like repeat them again because I believe you're not a newbie trader or are you well, I'll send you a
No, I'm
video.
not. This is like 5 years now.
Or I'll send you a video. I'll send the videos to you for the introductory class in case you want to or you need it. So I'll keep that for today because you're not a new trader. I'll just jump straight. I'll go on straight to the formation of the candlesticks. Yeah, there is. Formation of the candlesticks. Now I said we have bullish and bearish candlesticks. Basically, there are two types of candlesticks: bullish and the bearish candlesticks. Now I said this is a bullish candlestick. So I said we have two types of candlesticks: the bullish candlesticks and the bearish candlesticks. So basically, I was just talking about the
Yes.
anatomy of candlesticks for today. I'm talking about the anatomy of candlesticks for today. We have So I said we have two types of candlesticks, right? For every market
Yes.
or every price action, you can either have a bullish candlestick or what, or a bearish candlestick, right? So I'll
Yes.
be talking about the formation of these candlesticks. Now for a bullish candlestick, right? This is the bullish candlestick. When it first opened, this is not how it was. It first opened from this zone, this opening you are seeing, this is the opening of the candlestick. It opens from here, like this, right? It was like this. Then the sellers came in, they now push it down to this level you are seeing. So it was red at some point or black. I said black is red for my home because I customized my chart to my preference.
Yeah, I
So
understand.
black was red.
I
Are
understand.
you getting it? So the sellers
I
came in
understand.
and pushed the price from here, from the opening. This is the opening towards to this down here. The buyers now came in again, they now pushed the price all the way from here to this level you are seeing. This level you are seeing was green at some point. Then the sellers now came in and no, we're not okay with this price. They now push it to this level at which it is currently. That's the closing. So that's the analogy behind candlestick formation. Now, this bullish candlestick was not like this when it first opened. It opens from here, it was pushed down, creating this wicks you are seeing. Also pushed up, creating this wick you are seeing. The buyers and the sellers now decided to close at this current price. I don't know if I'm making sense. So this is what this
Yes.
wick you are seeing. The candlestick was once at a point, it was at this level at a point. But currently it is here, creating these wicks you are seeing. The buyers and the sellers pushed it all the way from what? From the top to the bottom, from the bottom to the top. So creating this wick you are seeing. Now this body, this thing you are seeing is what? Is the body of the candlestick. And now this is the closing, and then this is the opening. So this is what? A bullish candlestick. Now we have what? A bearish candlestick.
Understand. Understand.
When this candlestick was forming, this is not how it was. When it opens, the opening of the candlesticks, it opens from here, this level you are seeing. The buyers came in, they pushed it to the up. It was green at some point or orange for mine. The sellers now came in and no, we're not okay with this. We're not okay with this one, with this current price. We're not okay with this price. They now came in, pushed the price all the way from the top to down, showing us what? Giving us a bearish candlestick or a red candlestick or a black candlestick. The buyers now came in and no, we're not okay with this price either. Everyone now came in, and now what? Decided to what? To close the price at this current level, giving us what? Our closing price. So the candlestick open from here, this open here, and then what? Travel to this level, travel down to this level also, creating these wicks you are seeing. And then eventually closed at this level here. So that's the formation of what? This bearish candlestick. So it wasn't like this when it was formed, or when it was forming, it was not like this. It travels from here to here at some point. So eventually, both the buyers and the sellers now decided to close at this current price you are seeing, giving us what? This formation of the candlestick this way. So it has what? It has a real body. Can you see this arrow pointing towards the body of the candlestick? Then that's what for the bullish and the bearish candlestick. Then we have what? We have the doji or the indecision candlestick. The doji, indecision candlestick. Now, there's a reason why I love to explain this type of candlestick because it is very important. It's trying to tell you something. Now, this candlestick at a point, this is the opening. It doesn't have a real body like the bullish and the bearish candlestick. It doesn't have a real body but instead all the opening and the closing of the candlestick is at the same level. When this candlestick was forming, it opens from, let's say it opens from here, buyers came in, push it to this level, forming what? A bullish candlestick at some point. The sellers now came down, no, we're not doing this price. They now push it from that top, push it all the way to what? To this down, giving us what? A bearish candlestick. Because a bullish and bearish candlestick happen at the same time within this candlestick. So both the buyers and the sellers now came in that, no, the sellers were not okay with this price. So everyone, they're not buying that, no, we're not okay with this price. They now decide to settle at this current price you're seeing. So this candlestick is what we call a doji or an indecision candlestick. I believe you know about a doji. If you check the resources I sent to you,
Yes.
there are books there you can read about it. And candlestick pattern. And also you
Yes.
can download an application called JCP. You can search your Play Store or your App Store, JCP, and download that application. It's good. You can learn.
I think I've studied candlestick pattern before.
Alright. So we don't have to dwell much on this, right? Okay, that's good.
Yeah.
That's good. So now I want to talk about the momentum. What do we mean momentum? Now let's say for example we have a doji, or maybe we have formation of candlestick like this. We have a doji like this. Then we have a bullish candlestick. Another bullish candlestick. And then another bullish candlestick. Now, looking at this structure, there is what we call momentum. Momentum is who is winning in the market. You know, basically trading is is battle between what? Buyers and the seller, right? So momentum tells you who and who is winning the fight during a particular market sector. Now, looking at this example here, obviously, if you see this kind of candlestick, what will you think? Is it the buyers that are winning or the sellers that are winning the battle? If you want to trade, let's say this candlestick is a monthly candlestick. If you want to, and you are on a daily time frame, if you want to take any trade, are you going to be selling, shorting this market, or you buying with the trend? You'll be buying
I'll buy with the trend.
Yes, because the momentum tells you that what the buyers are winning what are winning the market. So the bullish are in control of the market. So that's what we call momentum. Now let me show you an example on the chart. You can see this strong move. Did you see any bearish move there? No. This is what? This is a momentum. No. This is a momentum movement. So you can when you see a momentum, obviously, like I saw people buying gold from this level here. Why? They have no clear entry reasons because the momentum, like it's just momentum is so bullish. So people were just like, okay, since and you know, gold can give you 100 pips as long as the momentum you are in line with what you are in line with the trend and you are following what you are following the bullish movement. Gold can give you your 100 pips within minutes or hours. That's it. That's momentum. So if gold wants to move, gold moves with what momentum. Momentum is what? It's basically it tells you who and who is winning the battle in the market. It can be the buyers and it can be the sellers. So that's momentum. So I think I basically explained everything. That is so quick. Like, do you have any questions?
No question. I don't have any.
That's good. Can we move on to like our next topic? Because I was thinking like or we like leave it to tomorrow. I was thinking we should, I didn't expect me to finish this thing within, so like, I don't know, within minutes. Actually, are you okay? We moving on to let's talk about market structure. Let's talk about market structure. You say?
All right. All right.
Yeah.
That's fine. That's fine.
I'm making things like faster for you because I believe you're not a new trader. I think it's really like trying to like break it down. Like, you understand you get what I'm trying to say, right? So you're not a newbie. I believe
I
like you're not a
understand.
newbie. So yeah. So now let's touch market structure really. Then we'll talk about it again tomorrow in our next class, or maybe next tomorrow.
Okay.
Yes, sure. So market structure, there are three types of or three kind of market structure. Market structure is basically what how the market moves. We have bullish market structure or an uptrend. Then we have bearish market structure or downtrend. And then we have the ranging markets or consolidation. So for the bullish markets, when markets give you what series of higher highs, higher lows, higher highs, higher lows, higher highs, what do you call it? You call it what? An uptrend. So this is a bullish market. Then we have a ranging market. Market is neither forming what it's neither giving us higher highs or higher lows. It's just moving sideways. We call it what? We call it a ranging market. I believe you are familiar with that.
Yes.
And then when market is giving us series of lower lows, lower highs, lower lows, that's what? That's a bearish market. So I said bullish market structure is basically when market is giving a series of higher highs, higher lows, higher high, then higher low, higher low. And then when the market is neither giving us higher highs, higher lows, higher highs, it's just moving sideways. We call it what? A ranging market. Then when market is giving us what? Giving us series of lower lows,
Lower highs. Highs.
high, then lower low. Lower low. And then lower high. So there are three kinds of market structures: bullish market structure, the range market, and then what's bearish market structure. Now let's do for each example on the chart. Now looking at the structure, clearly this is a bullish structure. Now let's go to a much higher time frame. Gold is always bullish. I don't know. Let's go to another. so so look at the structure now. What I see, they have a series of what? Higher highs, higher highs, higher high,
higher low,
higher high, higher low, higher high, higher low, right?
right,
So this one is an uptrend here like this, giving us series of what higher highs and higher lows. So this is a bullish what a bullish market or a bullish trend. So whatever I'm going to be doing, I'll always be looking for opportunities to buy within this range. So anything happening here, since on the other time frame I see the market being, in fact, it is okay for me to identify a market structure or what the market or the trend of the market. I should see at least two higher highs, higher lows. This is one like this, and then this is two. So this automatically will tell me what the market is what bullish. So for me to identify whether the trend is a bullish or a bearish, I need to see at least what two structures. I get it. Either a higher high, higher low, higher high, higher low. That's the two structure, or a lower high, lower low, lower high, or lower low, right? To give me the direction of the market. And after seeing that, what would I do? If it is a bullish market, what would I be looking for? I always be looking for opportunities to buy with and buy along with the trend, right? If it is bearish, look for opportunities to short the market. Now looking at this zone, this one is what is a ranging. Here is what ranging, just ranging. The market is choppy, going sideways. It's neither giving us a higher high and what a higher low. So we call this zone what a ranging market.
ranging.
So during this range here, if we should go to a lower time frame, it will be like you will see so many noise, nothing will be happening. Let's go to 1 hour 30 minutes. Let's go. And see, so the market is neither giving us, you can see, it's just moving sideways. It's neither giving us an high or a low. So during this like kind of market, what you do, you stay out of this market. And then we have what downtrend. Basically, I prefer to identify my trend on the higher time frame. But it depends on the kind of, yes, it depends on the kind of trader you want to be. Like sometimes I love to trade the 15 minutes time frame, and then I can use the 15 minutes to identify my trend also. Then use the lower time frames to look for confirmations entry or whatever. So it depends on the kind of trader or the mood you had at that time. So it doesn't matter. But make sure you are a day trader. The higher the time frame, the lesser the noise. Are you getting it? Or the lower the time frame, the higher the noise. So if you are to like be trading the 5 minute time frame, you can see the noise is too much. Are you getting it?
I understand.
I think it's raining by your
I
side.
understand.
So uh, let's look for a downtrend. I think UJ is very. Now let's take this side here. From here to here is what is a bearish market. Why is it bearish? We have a series of what? Series of lower lows, lower high, lower low, lower high, lower low, lower low, lower high, lower low, and then lower high. So you can see from here to here is what is a downtrend. And what you see, market eventually what change direction to what to a bullish trend. by breaking this last higher high. I see this last higher high was broken to the upside, giving us what? A bullish movement. That's what? A change of character or market structural shift. It's the same thing. We'll talk more about these things in our subsequent classes. So I think that's that for market structure for now. But basically, every class you hear me talking about market structure because that's the basic thing or the main thing we need to understand about price action. Market structure is the backbone of price action. So every time or every single classes you hear me talking about market structure because that's the backbone of what? Of technical analysis. So Steve, if you have any question for me, you can ask. Do you have any question?
No, no question, no question, no question.
That means you understood everything, right?
Yes, I understood.
Okay, that's good. That's good. So I think that's that for now. Wow. Just I think we had this class less than 20 minutes. It's not even up to 30 minutes. That's
I
so good.
think the class, the lessons were mostly things I had to revisit.
Yeah, that's true.
So that was,
Alright. So Steve, I think we can call it today, right? I'll send the video to you.
yeah, yeah.
Alright. Good night.
All right. Good night, sir.